Good afternoon. Today is Friday and it is February the 2nd. The time right now is 1:24 in the afternoon, and overnight we have very volatile markets. And this come on the back of the FOMC meeting in which the Federal Reserve has actually told us that there will be no rate cuts coming in March, which is the next FOMC meeting. And that caused equity markets to unravel big time. And we saw yesterday there was a major reversal. We see equity prices rush back up again. And this is actually can be quite chaotic because the market has been so volatile yesterday. It has basically undo what the price action post FOMC meeting. So we can see equity prices are poised to go higher, largely on the back of tech stocks earning reports, and we can see we have Amazon, we have Facebook, which is Meta, reporting better than expected result, and that caused the markets to rush up, especially in the Nasdaq 100. So we can see that the all-time high in the Dow is at 38,588.86. It looks like it's going to go higher tonight. And of course, tonight we have the non-farm payroll, in which market expects a decrease in the number of jobs created. Now in December, we have 216,000 jobs. It was more than expected. Previously, the market was only expecting 170,000 jobs. So that was a fantastic number. And for the month of December, the expectation is that job numbers will again come back down to 180,000 jobs. And in terms of unemployment rate, in December, we have, for November, we have unemployment rate at 3.7. And for December, market expect unemployment rate to mark up to 3.8%. So this is what the market expects. So do prepare for some kind of volatility going into tonight's trading. In the S&P 500, we can see that the S&P 500 closes January at 4,845.15, and on the first day of trading in February, market actually unwind at least more than 50% of the losses from 4,931.09. So this is again poised for higher prices based on what we can see so far. And in the Nasdaq did a very good job yesterday, and it actually rebounds off the January closing low of 17,128.74 to close at 17,344.71. Looks like it is also have finished a three-way pullback and is getting ready to rally. So again, the odds is that the market may actually rally tonight, this whatever the number is. And in the Nikkei 225, we see that Nikkei has traded marginally higher than at the beginning of the week itself. We can see that on Wednesday and midweek, we can see the Nikkei 225 futures traded to 36,370. And this morning, we have a marginal high at 36,430. So we can see prices are also bouncing. But you can see that the Nikkei 225 has not quite finished its three-wave pullback. So I still expect some kind of pullback eventually. And that could actually happen maybe next week, okay? Because we're already in the last trading day for the week itself for Nikkei. So time-wise, there will be no possibility of the market coming back down tonight, and we will have to see that happening maybe sometime next week. In the Hang Seng, we can see Hang Seng has been doing quite well. It has firmed up very well. In fact, we can see the market has bottomed up lightly at 14,796 in the futures contract in the Hang Seng, rising to 16,313 before pulling back 50% at 15,461. Market has stabilized and is building up a base. I think the market is getting ready to rally again beyond 16,313, possibly gunning for the 17,000 range, which is an equality move, if you ask me. And over in the dollar, and very rarely we change our mind. You can see that the dollar was actually poised to go higher after the FOMC meeting, but now yesterday we can see a total reversal of the dollar trade. We can see dollar index bounce off the 102.75 low and went to a high of 103.66 before it totally unraveled and is currently trading below 103. So there is a good chance market right now is in my mind, the currency markets overall, except for dollar yen, is totally, I cannot see what's going to happen next because the market right now is after a major rally come back down and it's back to where we were, and in my mind it is totally unclear. So I cannot give you an opinion on currency rates, at least for today. Okay, maybe after tonight we will have a better clear picture going forward. In the euro dollar, I was looking for the euro dollar to actually go down to test the 107 after the disaster trade post FOMC. We can see the euro dollar actually peaked at 108.88, and then before it comes back to 107.80. But last time we can see a total reversal, and now the price is back to challenge the 109 level. So again, not sure what to make out of this. There's a good chance market may continue to go higher for all I know, but it is very, very, very messy right now. Okay, in the sterling still have a hope of going higher, but instead of taking 128.27, there's a possibility market may be capped around 128. Earlier on, for the since the beginning of the week, I've been talking about sterling maybe going up to 129. So that one has to be tempered a little bit. I bring down my target to 128. So I have no position in currency, and I don't think you guys should be in currency market for today because it's totally unsure. And in the Aussie do have a marginal low, and we have a low this morning at 0.6508, and the Aussie has been rebounding. Based on momentum, there's a good chance the market may actually take out 0.6625 for all I know to go up to 0.6647 to 0.6690 levels. Dollar Canadian, again, is a bit messy. It was on the way up, and in fact, it traded to a high of 134.64 before unraveling. Now it's trading below 134, and it's probably near the lower end of this range. There's a good chance market will take out 133.58, and let's see what happens again. Again, I have no view. The only one with more possibility is this dollar-yen rate. Now, dollar-yen rate is very neat because we have a massive run-up in prices from 140.25 to 148.80, and then we have a three-wave classical pullback equality move at 145.89, and if everything else goes according to plan, we should see higher prices in dollar-yen rate, possibly above 148.80, and then maybe even challenge the 149.85 high. Okay, and this high is actually traded in November 22nd of last year. And in terms of the precious metals, you can see precious metal is also unclear. I was looking for a price to come back down, but yesterday we have a high that took out the most recent high here at $2,064 and $2,062. And not sure what to make of this because the high here at $2,065.50 does not look like a reversal to me, but the fact that the market take out this too high and then slip back down is quite telling. There is still hope that the market may eventually come back down here. I think near term, there is still that bearish possibility in precious metals to come back to test the $1,984, okay, to perhaps $1,973. Earlier on, I was actually quite bearish. I was hoping that the price would come back to the lower end of 1900, but right now, based on what we have seen so far overnight, that verdict will have to be tempered, okay? And in the silver market, silver has been trading so high. I know, no, this is not silver. I'm so sorry. I keep on missing this. Silver here pulled back to $22.49 before going up to currently about $23.18. And based on what we can see, there is a possibility of a three-way structure again from here to here. And if this is 100%, it will target just under $24, okay, which is just marginally below this swing high over here at $24.09. So most likely silver may go up, okay? And in oil actually unraveled in a classical three-way pullback from the high of $79.25 at the beginning of the week, and overnight low was $73.68. Now this actually complete the three-way pullback. If that's the case, then we should be seeing higher prices going forward. But because you can see that the market has been struggling to go higher, it's anybody's bet which way you will go next, okay? But based on the lingering tension in the Middle East, for all we know, we should be buying rather than selling, okay? And in Bitcoin, we can see Bitcoin actually stabilized after the reaction to the FOMC meeting, and market traded momentarily below the 42,000 handle, and is currently trading back up to test the 43,000 levels. So by and large, if we can see a pullback, ideally, back to the origin of this move is somewhere between 39,500 to 40,200. That would be a better area to actually position long, in my opinion, for a next leg higher in a classical three-wave to challenge the March 2022 high, or maybe even the year high so far at 49,000. So this is all I have for you. In the meantime, you take care. I'll come back to you tomorrow, not tomorrow, on Monday with further updates, and you have a great weekend ahead. Bye-bye.